financial markets and the economic fallout from the war involving Iran, what the end of Ebola means for Uganda's tourism sector, and from the Kenyan coast, how Uganda is being marketed and as a destination to regional travelers. Business Now, connecting Uganda's economy to the world.
We continue to explore innovative ways of strengthening our external and financial buffers. One such avenue is the operationalization of central banks' domestic gold purchase programs, which can support reserve diversification, strengthen reserve adequacy, build resilience against global financial market volatility.
Good evening, I'm Malcolm Sime, and this is Business Now, supported by Absa Bank Uganda, which continues to support businesses and entrepreneurs with financing, including digital lending solutions, while expanding support for women-led enterprises and key sectors such as energy. Tonight, we take the global view and examining financial markets and the economic fallout from the war involving Iran, what the end of Ebola means for Uganda's tourism sector, and from the Kenyan coast, how Uganda is being marketed and as a destination to regional travelers. Business Now, connecting Uganda's economy to the world. Let's now have a quick look at some of the top global markets stories which are making headlines. Africa is looking to unlock more private capital for the infrastructure it needs to drive growth. The African Trade and Investment Development Insurance, ATIDI, plans to double its capital to $2 billion within the next 2 years, giving it greater capacity to guarantee projects and to reduce investment risks. The Nairobi-based institution says the additional capital could ultimately double its annual guarantee capacity to $20 billion as African governments seek new ways to finance needs like railways, roads, energy, and digital infrastructure. Let's turn to U.S. inflation now, and the Fed Reserve called the Wall Street record run faces a fresh test this week, with investors turning at U.S. inflation data for clues on when the Federal Reserve could begin cutting interest rates, and that affects global markets. The July consumer price figures due Wednesday could move the dollar treasury yields and global equity markets. We'll also be watching oil and the Strait of Hormuz. Oil prices are back in focus as uncertainty over the Strait of Hormuz keeps traders on the edge. Brent crude is hovering around $80 a barrel. Imagine raising concerns that a renewed energy shock could keep inflation elevated and complicate the outlook for interest rates across the world. Into China and economy and the chips, because China's economy is slowing, but its technology ambitions are accelerating. As weaker domestic demand weighs in on growth, Chinese chip makers are making increasingly rapid advances, adding a new dimension to the country's economic rivalry with the United States and reshaping the outlook for global technology markets. This is Business Now, supported by Absa Bank Uganda. Absa continues to support businesses and entrepreneurs with financing, including digital lending solutions, while expanding support for women-led enterprises and key sectors such as energy. And so you can reach out to any Absa branch across the country and you get your businesses supported. This is Business Now. Let's now dive into our main stories. The East African Central Bank governors are reaffirming their commitments to financial stability and the region's long-term ambition of a single currency. Meeting at the recent Serena Chigo for the 29th Monetary Affairs Committee session, governors renewed progress on macroeconomic convergence, regional policy coordination, and the risks posed by global supply chain disruptions. And this also highlighted artificial intelligence and other digital technologies as tools to strengthen financial sector oversight and economic forecasting. We were following, and now we bring you all the highlights from the East African Governors' 29th meeting.
We continue to explore innovative ways of strengthening our external and financial buffers. One such avenue is the operationalization of central banks' domestic gold purchase programs, which can support reserve diversification, strengthen reserve adequacy, build resilience against global financial market volatility. Sharing experiences and best practice in this area offers valuable lessons as we work to build stronger, more durable policy buffers. In advancing financial inclusion, it remains an equally important collective effort. East Africa remains the global leader in digital financial services, particularly in mobile money. And we must keep leveraging technology to widen access to affordable financial services for households, small businesses, and the underserved communities. The EAC Cross-Border Payment System Master Plan is central to this drive, advancing greater inclusion and interoperability, lowering transaction costs, supporting economic empowerment, sharpening the effectiveness of monetary policy, and contributing to more inclusive and sustainable growth. Our commitment to a monetary union is not in question, but a candid review shows that we are consistently falling short of the convergence criteria, including reserve and inflation targets that fall squarely within the central bank mandates. Continued divergence from these criteria is eroding the credibility of our shared vision of monetary and political integration. To correct course, we must strengthen peer review mechanism and anchor binding national action plans in rigorous fiscal consolidation timelines and harmonized policy frameworks enforced through transparent regional surveillance and compliance protocols. I'm confident our deliberations will yield practical steps to strengthening monetary cooperation, promoting financial stability, deepening our financial markets, and share innovative approaches to reinforcing our policy framework and buffers amid an predictable global environment. Above all, let us work to remain anchored in the greater goal we serve, social and economic transformation of our region.
Despite the significant global shocks and uncertainties, the Kenyan economy has remained resilient and is expected to remain, the growth is expected to remain above the global as well as the sub-Saharan Africa averages in 2026 and also in 2027. This reflects the resilience and diversified nature of the economy, supported by the prevailing macroeconomic stability. Real GDP growth accelerated to 5.3% in the first quarter of 2026 compared to 4.9% in the first quarter of 2025, reflecting broad-based growth across all sectors of the economy with stronger activity in industry and services. Ladies and gentlemen, the recent reforms implemented by the CBK to improve monetary policy transmission have reinforced macroeconomic stability. These include the Enhanced Monetary Policy Implementation Framework, which we introduced in August of 2023. The framework introduced a corridor within which the Kenyan shilling overnight interbank average, which we call Kesonia, and the policy rate operate. This was augmented with the introduction of a revised risk-based credit pricing framework in September of 2025, anchored on the Kesonia. These reforms have strengthened the responsiveness of lending rates of commercial banks to monetary policy decisions, while at the same time promoting greater transparency and more risk-sensitive pricing of credit.
I firmly believe that strengthening our resilience to external shocks require greater coordination and closer collaboration among our institutions than ever before. We should continue to focus on practical and implementable solutions that will advance our collective goals of establishing a fully fledged EAC.
Somalia's economy remains a highly dollarized one. This is one of our main macroeconomic and institutional challenges. Dollarization limits the effectiveness of conventional monetary policy, constrains the central bank's capacity to influence domestic liquidity and credit conditions, and complicates the accumulation and management of foreign exchange reserves.
The government of Burundi has initiated the implementation of homegrown reform program that clearly defines the sequencing and the prioritization of key reforms needed to achieve sustainable macroeconomic stability and inclusive growth. The strategy draws on lessons learned and reflects a pragmatic, coordinated, and inclusive approach that strengthens national ownership and supports the gradual attainment of stabilization objectives. The reform program focuses on resolving key imbalances, laying the foundation for sustainable economic transformation. As part of the implementation of this stabilization plan, significant progress has been achieved in strengthening macroeconomic stability. Monetary policies have been tightened, notably through the suspension of central bank financing to the government, which has helped slow monetary expansion and reduce excess liquidity. Fiscal consolidation has also advanced, supported by expenditure restraint and improved domestic revenue mobilization. Furthermore, public debt to GDP ratio has declined.
Our economy, like others, continue to face significant challenges due to geopolitical tension in the Middle East, the Sudan refugee crisis, supply chain disruption, rising energy costs, and climate-induced shocks. Although a high international crude oil price have supported South Sudan export earnings, the benefit has been partly offset by increased import costs. Fellow governors, distinguished delegation, despite these challenges, South Sudan economic outlook remains positive. Real GDP growth is projected at approximately 6.2% in 2026, supported by increased oil production and improved performance in the construction, trade, and transport sector. Private sector credit has expanded by about 27.5%, while inflation is projected to moderate to around 8.2% by the end of the year.
Moving forward, our top priorities are to eliminate non-tariff barriers and transform our community from primarily a trading bloc into a competitive regional production hub. This calls for promoting industrialization, value addition, and investment in cross-border manufacturing and strategic industries, including agro-processing, pharmaceuticals, fertilizers, steel, textiles, automotive assembly, and critical minerals. Such investments will reduce import dependency, strengthen regional value chains, enhance the competitiveness of EAC industries, and create quality employment opportunities for the region's rapidly growing population.
You need a bigger space to grow your business. You need more equipment to meet demand.
You need to make sure everyone gets paid on time.
In business, you need advice, solutions, and